Hello. Happy Thursday, everyone. Unemployment, retail sales today. ECB hike 25 basis points. Hey, Ahmed, how are you? Hanging in there. Hanging in there. That's why the live streams are a bit spotty right now. Good morning, Patrick. Yeah, we got it's gray here from, not clouds, it's gray here from the smoke. It's gray and hazy here, too. It's been interesting with these wildfires. Hey Martinez. Well, I mean the Fed before they've always wimped out for the last so many years. So now we'll take a look at the market watch. I mean the Fed watch tool. It is giving them room to hike one more time. Hey Kalani, haven't seen you in forever. Welcome back again. Felt bad. Sorry I yelled at you last fall. But welcome back. Yeah, I was just frustrated that day. Sorry about that again. Hey, let me see if we have time to look at Target. Hey, Christoph, thank you. Feeling a bit better today. Yesterday was rough. We shall see. This morning, let's just get right to it while we're waiting for more people to filter in. Retail sales coming in better than expected. Empire State Manufacturing Index pretty substantial bounce back. Remember last time was ugly, and this time it shifted positive. Philadelphia still negative. What else do we have? We had initial jobless claims, which was a miss off the consensus, and previous was revised to 261, I think. But it's just a slight miss there. Philly business conditions actually a nice pop back. Prices paid holding at the upper. I mean, they pulled back from the super high, but they're holding right around this 10 mark. What else do we have? We have continuous jobless claims was depending on where you're looking, right in line to a slight miss. And I got to find a better site than this. Sometimes their numbers are off here. What do we have else coming up? We New orders, by the way, from Philly was weak still. Industrial production coming up in about 10 minutes, and then we have business inventories at 9 a.m. But the major stuff now is shifting to OPEX tomorrow. We got quad witching, and we got consumer sentiment and consumer inflation, and Bullard and Waller now to see what they reinforced from the Powell yesterday. Remember, it was a pause slash, I guess it's a skip if they do hike. Now, Fed Watch tool, I just have it on the probabilities. Remember, we got 41 days till the next thing, so this can change drastically. But look, based off the dot plots being a lot higher, hope everybody took a look at those dot plots yesterday. It's one more hike now, fully priced in through the end of the year. You see, through December, hike and pause at the next hike. And if this happens, then that would definitely be the skip. And then there's one cut starting in January of 24. So the market's starting to buy the narrative that higher for longer. And then the cuts are only down by December of 2024 to 375 to 4. So that is definitely higher. This morning, we have chips after NVIDIA went on a rip your face off rally yesterday, a slight pullback, some mega caps mixed, Tesla pulling back. So it's a slight negative basis this morning. Technology, let me just refresh this once more. Yeah, see, there we go. There we go. Consumer defensive, so a little shift into defensive stocks, energy, and healthcare. So this is a defensive shift and take it out of technology and consumer cyclical. So as people would say on the talking head media, this is a risk-off day. When you see technology and cyclical pulling back and you see defensive energy and healthcare sort of rallying, it's a risk-off day. Fear and greed, still an extreme greed. If you didn't tune in yesterday, we're still at this very elevated area where we've had major prior tops before. Does that mean we have to stop? No, but I am on high alert and we're still in very overvalued territory. So Keep that in mind. Hey, Sterling. Coco, I just haven't been around much. I'm dealing with a number of things, and it's just I can't do a half-assed live stream, and I got to make sure I give out good information. And if I'm either away from my desk or I haven't had time, or I've shifted my stuff time frame out longer because of everything that's going on. I still look at the short-term stuff, but my days are a mess right now. Uh, I know. I know options 22. Here he is, options 22. Want to know about strikes. I'm still really focused on this 4,400. Now, the stuff with this, we got quad witching tomorrow. Still, now it's technically back to triple witching. It's still called quad witching on the quarterly expirations. And this is a biggie. But if we're hanging out around this 4,400 area in the S&P, there is a ton of call gamma there. I'd be watching for a pin. The next major level isn't till, well, I don't think we're going to tackle 4,300 unless we get a blistering sell-off today. I'm looking to any sell-off to still, as long as we hold, above about 33.75 to gravitate to around this 4,400. Unless we start really breaking 33.75, 33.80, that's the only way I'll focus on this 33.50 area. But that's really what I'm watching, and the gamma flip right now is 43.45. Sorry, I could not read that for a second. So we're still really in positive gamma. So remember, if it starts pulling back, as long as we stay in positive gamma, it's getting bought, and on rallies it's getting sold. So we have with the OPEX tomorrow, and that's going to be a major magnet up here. And the only thing that'll shift that for me is if we get momentum bars. By the way, Kroger missed. It was a gap down, but Kroger, interesting enough, missed on revenue. So the revenue starting to pull back in Kroger, which means consumers might be pulling back a bit from and like going to cheaper stuff and really getting picky at the grocery store. Inflation could be starting to take its toll even more. Adobe after the close today. And that pretty much wraps it up. So, yesterday we had the bounce back after Powell. It did come down to that area I was watching. Remember, at this point, because this is an exponential, so this has moved up, but that hit the bottom really nice yesterday. I am watching this two bottom area. Okay, 43.80. So 43.75, 43.80. If we start getting below that with momentum, then I'm going to be really watching that 43.50, and that's where this last little pausing area was. But unless that's broken, anything I'm going to be watching for that to be major support. So we stopped at the cluster yesterday. I really doubt we are going to make a major push higher. A major push. I really doubt it with OPEX. So anything today, I'm just going to use a little reverse harmonics. If we tried to eke out something and bounce it back, which would give me 44.46, 46.53. But I'm really thinking it's going to be a magnet right around this. So we got a gravitational magnet force field here. Again, look at this. And then the daily rotation zone would be the major support area right in front of this 43.50 to 43.60 area. So good morning, PMG. Again, I'm going to reiterate, the only thing that will make me shift is if we start getting significant momentum bars to the downside. Other than that, we're at some key areas. 15, even if we pull back on the NASDAQ, here's another time where I'm watching this significant low area. Why? We normally focus on closes, but we do have these dual reactions right here. And I'll actually be watching in front of there around 15,000. But where would I be looking for? About 15.2 on any bounce back in the NASDAQ. So that's where that sits. We're a long way off. I mean, unless something drastically changes, I'm not expecting the gap fill or any major rollover play till after the OPEX tomorrow. And you see before that gap fill, that's the 62.5 right there. So I have to stay in. We could snap back from the selling pressure this morning, but I'm going to stay more in chop mode unless I see something that really changes. The Dow, the Dow is virtually the same with this key support area. So that unless this breaks 34,075, that's the only way I'll start getting negative on the Dow. All right, that's really it. Other than that, we've had a one-day pullback. How will the gamma force field be affected after OPEX? Well, we get a pretty big expiration tomorrow, but so much has shifted now. So much has shifted to the 0-day expiration options. They're really running the market since they started last fall. So we get stuff with these, and what's going to be more important is the repositioning next week. The repositioning for the hedge plays next week is going to be more significant. Yeah, plus 3-day weekend, so shorts will cover. That is right, because yeah, we got Juneteenth. Juneteenth. How could I forget about Juneteenth? So thank you for putting that in there. This is why all the viewers are so important, like Options 22. Thank you for putting in reminding me of the Juneteenth holiday. So we got OPEX tomorrow, and there's not going to be a lot of stuff opened until Tuesday. VIX, we do have a little potential double bottom. That's the only thing that would shift me more significantly to bearish mode. I would be watching, as long as this holds in, I would be watching for a VIX close above 1506. Is that a major? Well, it could turn into something more major, but I am keeping an eye on that as long as that does hold up. It's nowhere near triggering. We need some pretty big sell-off. Yeah, 40%. Some days it's even above 50%. We're in a bull run in a bear market from my perspective. I don't go by the silly media's 20% rule. If you followed that, then in the .com bounce backs, there were multiple bull markets within the overall bear market. That's just something remember, the financial media is always bullish. Now, I'm in the camp that until this ends, it's in trailing mode. It's also closed above the key 62.5 on 3 out of 4. So from a longer term perspective, I have to give it a little wider stop because we could stay in bull mode. But is it a bull market? No, that's different. Bull mode is different from a bull market. DAX, slight little pullback, but yes, it's a interesting double top formation in the DAX because of this sideways area. But that is something, and we're a long way off from triggering, but that is something I will be paying attention to as long as it's still valid on the DAX. Remember, long way off from triggering. It still has to do a lot of technical damage to get there. It could triple top before we get there, but it is something I'm noticing. Though this is not a double bottom in the notes because it's not reversing enough of the movement, this would be a very key inflection point. Although I would not be surprised to see more consolidation around here. There's not a lot of great setups just now. The 10-2 curve, look at this. With the double top, remember this was a weekly double top, and yesterday hit the second target, and we could easily be going towards that third target in the next couple days. And remember, close below 62.5, so that 87.5 is a key also target. So Are we going to test the lows from potential March right before the banking crisis, the mini banking crisis? It's looking that way. Dollar index hit the second target or the first target, so it's a stop lower from this sloppy double top channeling pattern. But the next targets are 102, then 101.70. The ECB was also stressing with their 25 basis point hike this morning that they see higher inflation and the dollar's reacting to the ECB press conference. So I'm still watching for more dollar pressure, although here's where I would not use the third target. I would actually make the third target in front because of 62.5. And this, remember, between the 50 and the 62.5 could be a key bounce area. So I'm really focused on this 102 target area with that. Crude, still in consolidation. 67.50 is very key. But there's not a lot of great setups in crude right now. Gold, pulling back, testing the lows from 26th of May and holding there. Little bounce back there. Is this a potential double bottom? Yeah. Based on the separation of these two things, it can be viewed as a potential double bottom. You can see it here on the weekly. That's the only thing that shifts me back into short-term bullish mode. I know it's going into the tails on the weekly, but on the daily, the first and second targets are still valid. I still have a potential bearish bias in gold unless we trigger this double. We could easily hit lower. Then I'm watching for the major reversal. Euro breaking through the top of the channel. Remember, we had the double bottom. Second target hit yesterday. First target hit yesterday. Second target hit today. So we still have one more target to the upside. And that's right at the 62.5. So that is a major target area. This is about 109.20 area. The pound has not, the pound has rallied back up, and now do we have a potentially valid double top, which is a long way off from triggering, but that is something to keep an eye on. Might never trigger. The next major target area is 127.91. Bitcoin finally hit the first target of the horribly sloppy double top, which was still valid. I'm still watching for lower price action. So any pops in the rallies, unless we really get above the stop level, is still to be sold in my perspective. And that stop level, which would invalidate it, is not till about 20. Just remember 28,700. Tesla coming up. It has hit the 75 harmonic and very overextend with the rollover play. My pullback area is 242. If it breaks below 242, then I'm watching for the gap fill back to 234.86. Other than that, it's hit that 75 harmonic. If we stay in full-blown bull mode, the next key target is 288. Other than that, once we get some kind of reaction, then I'm watching for the secondary pop to gauge the bounce back strength in Tesla. NVIDIA coming up to the little reverse harmonics I put on here, 430. Now we're gapping down today, but I don't have another pausing bar just yet. So, realistically, I have to go with, in case you're wondering, if NVIDIA insanity is going to continue, although this is getting to crazy levels. I need to use these harmonics, and the next would be 458. Let's look at the spiders and the Qs. Little gap down. So on any rally, I'd be targeting yesterday's close, 437.18. And then if it does come back, the high area from yesterday, to which was 439.06. And then we have the harmonic 439.81. Yesterday's low is going to be very key, 433. Just go off 433.60. Going to be the key level, and then you're getting into some daily support. So unless we get those major momentum bars, would watch for support coming in around yesterday's low, and between that and there's still that gap 433.80, and yesterday's low was 433.59, so that's going to be still the key area. The Qs, gap down. So the first thing is going to be the gap play on any bounce back, 365.90. The next major target's 370.10. Major support is 360.50. Major support is 360.50. So that's where that sits. Why is it going up every day? Because people are still piling in the AI play, and we're in a short term, one of those short term retail bot, buy the options, momentum driven gamma stuff, especially in AI. We've seen it before. We saw it multiple times during the pandemic, and we're just rehashing it. You look at stuff like this. Look at this again. Carvana. We've got this fueled crap moves. It's being piled in. Look at GameStop. These, I mean, they're looking for anything in these earnings to try to get these things are going to roll over again. But that's the kind of markets we're in. So what else do we have here? Nvidia double. Did I? It's or 38. Technically, yeah. Yes, we'll see if this high area from yesterday holds, because if that really breaks, it's off the table. But technically, it is still just by the hair of the chinny chin chin a potential double top in Nvidia, just barely. I know Sterling was asking about the 10-year, the yield. By the way, this was invalidated. The 10-year yield let's see. I did not look at the yield charts this morning. The 10-year yield is valid. The 10-year yield is valid for back to 340 and then about 333, but a long way off from triggering. So that's where that sits. Is that a did they? I didn't see them announce a stock split. Did they? I didn't see it. It doesn't mean that they didn't announce, but I haven't heard anything on it. Might have missed it. Does anybody else? Or are you asking, will it split? Who knows? I mean, people have talked about that before. Let's check in again with the ES. Let's look. Is there anything in Adobe besides the insanity of this? I wonder how many times they'll stress AI on the call. So it did come down to that 87.5. I mean, this came back down to 87.5, then broke out. Let's reverse these harmonics and see where it sits now with key resistance. Let me just start over. Let's see how many times they also talk about AI on the call today. Hitting that 50%. So anywhere up in here is very toppy for Adobe. Because this has bounced back to the very toppy area. So I would not be chasing this higher in earnings. All right, thanks, Sterling. So there's nothing. I didn't hear anything. Thanks for confirming. Again, I may miss things, so I may miss things. So on any pullback in Adobe, I'd be watching 450. 450 breaks. This could get interesting because this has gone absolutely vertical going into earnings with AI stuff. But I would not be chasing it higher. All right. Nope, no one cares about recession anymore. We're still going to get one. Could be pushed out a bit longer again. But that's where we sit. Let's just take a look at the shorter term stuff going in the open. Really, the S&P on the open, 43.90 is going to be very key unless that starts breaking with momentum. I'd be watching for dip buyers to come in anywhere down here if we do retest that range. And your resistance going in the open is about 44.20. So, all right, I have to jump now. It is the open. We'll have to take a look at Intel later. Thanks, everybody, for tuning in. Again, there will not be a live stream this afternoon, so I shall talk to everyone later. Bye for now.